Thank you. Well, welcome, everybody. My name is Cedric Youngelman. I'm the host of the Bitcoin Matrix podcast. I'm also CEO of Chaos Enterprises. We generate random numbers, provably and audibly, and we'll be rolling that out this year in lots of exciting ways. I'm excited to be joined by these esteemed gentlemen, so I'll let them come on stage and introduce themselves. Larry, Mark, Craig, Matty, you guys want to come on stage? Why don't you go to the end and start?
I think he wants us in that order, but yeah, I'll do it.
Okay.
Okay. Yeah, so I'm Larry Lepard. Most of you guys know who I am if you are on Twitter. I make a lot of noise. I'm not a friend of the central banks. They deserve everything I throw their way and more. Yeah, and so it's great to be here. It's great to see everybody. This is an awesome, awesome group, and there's no extreme danger here. There's only extreme danger if you're holding fiat. We're in a safe spot. So where's Mark? Don't worry, it's all going to be good.
Good morning, I'm Craig Shapiro. I'm with the Bear Traps Report, which is an institutional research firm. I'm also local to Naples. I'm pretty active on Twitter, have similar disdain for the Fed and for Treasury Department and for government spending, and I'm a Bitcoiner.
Good morning. My name is Mark Hindley. I'm the CFO of a family office here in Naples. We have a very healthy allocation to Bitcoin and digital assets. Prior to that, I spent a couple of years working to build a crypto bank within an FDIC-regulated bank. I can assure you that it is very difficult to do that. This was a couple of years ago. I'll have some thoughts that I'll share later. But thanks for having me, John. I appreciate it very much. Thank you.
How's everybody doing? My name's Matty. They just found me in an alley behind the building. They said they needed somebody on this panel, so I said I'd step up to the plate. Just kidding. I am the CEO of a company called Consensus Protocol. We're very active in the mining space, and I'm excited to be here with you guys today.
Wow. I don't know how many of you guys were here last year, but I think a lot has changed over the last year. We're going into what they're calling Trump 2.0, the Bitcoin era, and I'm really curious what you guys think is going to happen this year, or your outlook or your thoughts. So Larry, let's start with you. Maybe give us a few minutes on what you think 2025 is going to bring.
Yeah, well, 2025 is going to be a great year for us. We can already see that. The Trump administration will start next week, and I think there's no doubt they're going to do a strategic Bitcoin reserve. My partner was with some of the people at Cantor Fitzgerald, and they indicated that was the case. There are all kinds of signals from a number of sources that support that. Now, how big it'll be, it's hard to tell. But let's go back and let's wind it back and look a little bit broader. The reason that this is going to be a great year for us is that this is going to be the year that forces the Fed's hand into what I call the big print. And I've got a book with that title coming out soon, which you'll all be able to buy on Amazon in a couple weeks, or I'll give it to you if I see you. But the bottom line is, as we now just know, because it came out a few days ago, the federal government, year over year, this past quarter, end of December, spent 40% more than they spent in the prior year. 40%. And so it really is Lynn Alden's meme. Nothing stops this train. This federal government is completely and totally out of control. And the bond market is starting to notice, and obviously the market for sound money assets are starting to notice. Interestingly, Bitcoin, since 2020, when all this really started with COVID, Bitcoin's up 2,000% and gold's up 200%. So pointing out why Bitcoin is so much better than gold, but gold is still your second best choice. There is a second best sailor. If you don't want to have the volatility of Bitcoin, gold's a good substitute. So, but I think what's going to happen is there's going to be an enormous clash between the Trump administration and Jay Powell. And it's going to be very interesting to see how it plays out. He can't fire him, and Powell said he won't quit. But if the bond market goes, tits up, no bid, they've got a serious problem. And I think it's going to force them into doing something similar to what they did in the 2020 example, or the 2008 example, or the LTCM example, or every other example that I've laid out in my book. It's been, 50 years of financial mismanagement by these crooks. And, these bastards are going to lose, and they deserve to lose, and they deserve to lose now, and it's imminent. So this is going to be a really great year for us. In terms of the price of Bitcoin, I think we're going to see 140,000 in the next 90 days. It's forming a flag right now around 100. It went from 58 to 100. That's 40 points. Flags fly at half mast, so add 40 to 100. We're at 140. I bought March calls on IBIT up 20%. So I've got to go up 20% to break even. If I go up 40%, they're 5-baggers. So that seems to me like a pretty good bet. And I don't know. That's kind of my big picture. I mean, we could drill down a lot on that, but I don't want to bore everybody.
I want to go to Mark. Maybe
Sure.
from a more family office point of view.
Sure.
About 2025, are you as maybe thinking things as imminently as Larry is?
Sure. So a lot of our assets are in the private equity space. So we think that we sort of look at it through two lenses when it comes to Trump and the Trump admin at large. There are things that we have great clarity on. Speaking about digital assets, it is extremely clear that the new regime, the Treasury, CFTC, the SEC, it's a new paradigm for digital assets. 20 years ago, my career in finance began in the payday lending industry, which at that time was the most hated industry in America, only to be usurped by the Bitcoin and digital asset industry, which is now the most hated industry on earth. That changes on Monday. So there is going to be, to your point, a paradigm shift around the integration of digital assets and Bitcoin into the mainstream. Define that however you want. So we have great clarity on that, which is super bullish. From the private equity perspective, we need exits, we need liquidity. That's tied to growth, pro-growth policies. We think we'll unlock private equity exits. That's good for everyone, especially for us. But there's also things that we don't have good clarity on at all. Tariffs and the impact of that on inflation. To Larry's point, the Treasury market is very nervous about inflation. No one knows. If someone claims that they know what's going to happen with tariffs or buying Greenland, they don't. No one knows. The Treasury market's telling you, the market's telling you that there is a high risk of a reflationary cycle. That's not great for risk assets. Bitcoin is starting to become outside the traditional risk asset envelope because it's tied to fiat, Fed mismanagement, fiscal mismanagement, et cetera. So I'd say super clear and bullish on digital assets, not so clear on inflation in the Treasury market, and all that kind of remains to be seen. What I would add that I think is actually the most bullish thing about Trump is the fiscal part. And I'm going to talk just kind of personally for a second. When you think about the fiscal deficit, and as Larry and I'm sure everyone will talk about, is we have a spending problem in this country, clearly. What doesn't get talked about is where that money is actually being spent. So in 2023, the U.S. economy, you and the federal government spent $5 trillion on healthcare. $5 trillion. 75% of that spending is on chronic and preventable diseases, type 2 diabetes, cardiac diseases, et cetera. I think looking to Doge, which is very, very good and a great idea, is great. But I think that the bigger impact on fiscal deficits is actually going to be RFK. Because the real puppeteers in our economy that enslave us isn't the Fed. They're a culprit. But it's the processed food companies, the pharma companies, and the social media algorithms who cancer our mind, our kids' minds, our bodies, and our kids' bodies. If we can rein in those entities, nothing to do with the Treasury market, that's $3.75 trillion a year in savings that we'll all benefit in. And we'll live longer and we'll feel better. So that's, I think, is our macro view.
Definitely a lot to unpack there. We're going to go to Matty. Matty, maybe you could tell us your thoughts about 2025, maybe from the alley where they found you. Really your thoughts as a miner, sort of your outlook going forward here with the Trump administration.
So, as a business operator in this space, the past 4 years, I would say, have been probably some of the hardest to be in the crypto Web3 industry, writ at large. Actively being hindered by not having access to bank accounts, no lending facilities. You're in a prohibited industry is what I've heard over and over again from people in different banks or lending institutions, et cetera. So it has been very hard to operate. We've had uncertainty in the mining landscape, for example. I think at one point the Biden administration was trying to propose a 30% tax on miners in the USA. So when these things are kind of being put out there, it's very hard to operate. It damps down on people wanting to come into the space, invest in the space, be involved in the space. Of course, Bitcoiners are going to win. We're going to win no matter what. It doesn't really matter. So there's this argument that we don't care what happens in the government. We don't care what happens over here. And there is some merit to that. That is true. We're going to win no matter what. But it is much better when we have legislators and people in government who want to promote freedom, that want to promote the American dream, the American ideal, and who get behind these innovative ideas in technology in general. So I think we've been operating in great, we call headwinds, right? Very hard to move forward. And I think with the incoming administration, that's all going to turn into tailwinds. So we're going to have this support behind us, actually, where we want to be pro-innovation, we want to create jobs, right? Because I employ many people that rely on me, right? That have families that need income. So it's nice to have a supportive administration coming into play that's going to get behind that and help America lead in the world. Many of you don't know, but over the past 4 years, developers, talent have actually been fleeing to other countries. So if you look at Web3 development talent, it's gone like this over the past 4 years. So other countries are now taking over the leadership roles in the world. And America is supposed to be at the forefront, right? So hopefully over the next 4 years, we can come back to that. From a macro standpoint, I think people haven't quite priced in or realized that if nation states come into play here to buy Bitcoin, I think they're going to teach the world what true absolute scarcity means. Bitcoin is an absolutely scarce asset. So there's only 21 million Bitcoins. There's no money printer. There's no Jerome Powell who's going to increase liquidity by printing all this money. There is no stock reissuance where they're going to issue a bunch more shares to dilute the shareholders. There's nowhere else to go to find Bitcoin in the universe with stuff like gold or whatever other assets, right, that are physically scarce but not truly absolutely mathematically scarce like Bitcoin. So I think Bitcoin is an idea that's time has come, and I think over the next 4 years we're really going to see that play out on a macro scale. Woo!
It's incredibly optimistic coming into 2025, but I feel like we all are kind of thinking in one direction or expressing kind of one thought here. Or I'm kind of curious, Craig, what your thoughts on 2025 are, and if you see any sort of bearish cases.
Yeah. I mean, the problem with the euphoria around Trump and the new administration coming in is that there's a lot of euphoria about Trump and the new administration coming in. And you basically have risk asset prices that are at all-time highs. And the issue is that, and to say it mildly, the last administration has left this current administration with a bag of shit. I mean, the deficits are out of control. Janet Yellen has issued short-term treasury paper as opposed to terming out the country's debt for longer periods of time. And so the new administration is going to be tasked with having to term the debt out, which basically means instead of borrowing for 7 days or 30 days or 60 days, we need to start borrowing longer, for 10 years, for 20 years, for 30 years. The prior administration didn't do that. As far as sanctions are concerned on energy, the Biden administration decided not to go full blast on sanctioning Russian oil, on sanctioning Iranian oil, and then last week, because they didn't want gasoline prices rising ahead of the election because they were trying to win the election. So what happens last week? A week before they leave, they decide to sanction Russian oil in order to put more pressure on it. So what has happened in the last 2 weeks is oil prices are up 10%. And Trump has talked about sanctioning oil further, sanctioning Iranian oil. So what we don't know is exactly what the Trump administration is going to do with respect to tariffs and with respect to sanctions and with respect to their ability to push a pro-growth agenda in that environment. And so as we step into 2025, there's a lot of uncertainty about these policies. And so my concern is that as Trump needs to deal with some of the errors and issues from the prior administration, the only way to do that is really to orchestrate a slowdown in the economy, to try to bring down inflation, to try to right the wrongs of the prior Treasury departments, are terming out the debt, which is going to mean higher interest costs, lower growth, and try to stymie some of the of our foreign adversaries with respect to who have had adverse trade policies against us. So that's my concern heading into 2025. And the issue for Trump, I think, is he has a window here to blame the prior administration for all these issues. But the longer we get into his term and he doesn't address these prior issues, they become his issues. And if he doesn't, so he has an incentive to do things early in the term to try to bring down inflation, to try to bring down asset prices, to try to bring down growth, to try to be more aggressive on tariffs, more aggressive on sanctions with our enemies. And so that, to me, creates a very adverse, potentially adverse environment for the first 6 months of the administration, where we are concerned about growth. The low-end consumer is facing now, like you said, a resumption in inflationary issues and interest rates. I mean, credit card rates have moved from mid-teens % in 2021 to 2022 to 25, 26% now. I mean, the low-end consumer in this country is getting absolutely crushed. And so we need to figure, Trump needs to figure out ways, and the administration needs to figure out ways to bring overall cost of living down. But it's going to take time, and it's probably going to take a risk asset price correction in order to do that. So while I'm very constructive on the long-term outlook for Bitcoin, Bitcoin is a risk asset. And so to the extent that we have a risk asset slowdown, Bitcoin's going to suffer alongside. Now, I think equities are also going to suffer, and other things are going to suffer too. And to Larry's point, it will be that correction that brings about the big print, right? There'll be a pain tolerance at a point of no return where the Fed or Treasury comes in and says, we cannot tolerate this type of slowdown. And that's when they'll start printing money again. And that's really what I think when you really want to plow into Bitcoin for the next and bigger, larger move.
Can I just comment on that? Because let's go back 50 years. Over the last, I guess my point is, I don't believe that either political party in this country really wants to solve the deficit problem, and here's why. Over the last 50 years in this country, 50 years, 4 years have seen a budget surplus or a balanced budget, both political parties. During that time, the last 50 years, US GDP has grown 2,000%. You have 2,000% GDP growth in the last 50 years and 4 years of a balanced budget under both political parties. We are a debt-or nation. Until we can break the cycle of debt, because the Treasury prints money, because the US House of Representatives, the Appropriations Committee, who never gets talked about, who tells the Treasury where to spend the money, until we fix the debt issuance problem, we'll never solve our fiscal problem whatsoever in this country. You cannot grow 2,000% and still run massive deficits. And it's up to us to elect people to the House committees to fix that problem.
Yeah, no, I totally agree. I think the issue that we have now is because of the way the prior administration has sanctioned Russian reserves and other countries' reserves, we are lowering the demand from overseas to buy our paper, right? And so for 50 years, we've been able to basically sell unlimited amounts of debt at low rates because everyone would buy our debt, and all excess trade balances were settled and held in U.S. treasuries. But when you sanction Russia out of the financial system, it gives a tell to China, to Saudi Arabia, to UAE, to other countries that are net exporters to America. Your money's not safe here. And so if your money's not safe in America, you're going to stop buying treasuries. That's exactly what we've been seeing now for the last 2.5 years since those sanctions on Russia went into play. Now, that's great for Bitcoin. That's been great for gold because countries now are storing excess trade balances away from U.S. treasuries. They're storing it in gold. They're storing, but increasingly will think about storing it in Bitcoin. But it's the problem for the U.S. government is that they are going to have to finance these deficits at higher and higher rates of interest. So we are getting now closer to where $36 trillion of debt and running $2 trillion a year of deficits is becoming an issue.
Yeah, I think Craig has alluded to a very interesting and important, tricky juncture that we're at, and that is we're in an enormous bubble. We're in the everything bubble, driven by all the free money and all the misbehavior and the $5 trillion of stimulus and COVID, et cetera, et cetera. And they've managed to extend it because, we had, Janet paid excess reserve, money on excess reserves. So you had, reverse repos. And I mean, they've hidden the underlying problem, and Biden has really kicked the can. And as Craig said, Trump is walking into a shitstorm, an absolute friggin' shitstorm. Because when this bubble bursts, I mean, we're running huge deficits with low unemployment and a record stock market. Mm-hmm. And every time those things have changed, the deficits get even bigger. And those bigger deficits imply you got to sell more bonds, and the bonds are going to have to cost more. And this is a death doom loop. I mean, that's exactly what it is, and there's no way out of it. And at some point, the entire bond market is going to look at the Fed and say, "Sold to you." And the bond market, by the way, is $36 trillion. The Fed balance sheet's $7. So if you don't think that's going to grow the money supply and cause our assets to go to the moon, then you're not thinking. So But the tough part, and Craig has got it right, is that today, Bitcoin still trades. It has I think it's getting more and more of a risk-off component to it. There were some days recently where it should have gone down because the NASDAQ or the triple Qs were down, and it didn't. Gold was up and Bitcoin was up. So I think it's having, a slightly different tone to where it used to be. But there is no doubt, I mean, I lived through 2020, I lived through 2008. There's no doubt that if we have a financial accident, that there could be a very brief moment in time in which Bitcoin, gold, all assets just get hammered because, what happens is in that situation, you sell what you can sell, not what you want to sell. And I remember this like it was yesterday, when in the March 2020 example, before that big print, which is the biggest print we've had to date, and stuff. I mean, when COVID hit, the stock market was down 35%, and within weeks, gold, Bitcoin, all of them, they were just getting crushed. And then one Monday morning, Jerome Powell came in and did his Draghi imitation, said, whatever it takes, we're going to print as much money as it takes. It does not matter. We are going to solve the problem. Gold was up $200 in a day and a half, and Bitcoin was up 40% in a week. And so that's going to happen again, but you've got to be prepared for that. You've got to view it as a buying opportunity. But I think the difficulty is to try and be cute and think, well, that's likely coming, and therefore I don't want to buy Bitcoin today. Boy, the window to buy it that cheap, it's not going to be open for very long. Because when we know for a fact, based on 50 years of financial history, that the third Fed mandate is when they reach a financial problem and the bond market starts to fail, as it did in 2020. The bond market went no bid. Craig knows this. When the bond market starts to fail, that means the government can't fund itself. And the government can't fund itself, they're going to go out of business. And so what do? They have one tool left. I mean, they've got the hammer. Every nail looks like print. The hammer's the printer, and everything looks like a nail. So we know with absolute certainty that the big print is coming because the alternative is the Great Depression, and they won't let that happen by definition. And the problem is that because of the way compounding works, each of these prints becomes bigger. Bernanke printed $3 trillion, it took him 4 years. Powell printed $5 trillion, it took him 18 months. The next guy's going to have to, whether it's Powell or the next guy is going to have to print $10 trillion, and it's going to take him, a month. I mean, and eventually what happens is people say, hey, you know what? They're never going to be able to stop this. And then they say the money's no good, and Gresham's law kicks in. Bitcoin goes to $1 million, and the dollar's worthless. That's where we're going, and that's why we're on the right side of this trade. But the path is difficult. I mean, there's a good chart on Twitter that most of you have seen done by my friend Dan Oliver at Mermican that shows the volatility of the failure of the Weimar Deutschmark in 1921 through 23. It can be a very volatile event. So, you gotta understand what we're dealing with here and be prepared to deal with the vicissitudes of what Craig is describing. But Craig's got it dead ass right. We're headed for a crack up, and I don't know if you agree with this, Craig. I don't see how they make it through this year without this happening. I think it's got to happen in 12 months.
Yeah, and that's what I was alluding to earlier. Is in my view, there's incentive to have it happen sooner rather than later, because then you could blame somebody else. I mean, Trump is a master of blaming other people for things, and this is right up his alley, right? I mean, there's literally there are people he can blame who are at fault. I mean, he can really blame the prior administration for, and should. You can blame Janet Yellen for the way that she's decided not to term out the debt and tried to run the economy hot to win an election. And so I agree. I think there's risk here in the next 3 months that Trump goes aggressive on sanctions, goes aggressive on tariffs, goes aggressive on bashing the Fed and Treasury for doing the things that they should have done, and say, I'm fixing the mistakes of the prior administration. Trust me, we're going to get through this, but there's going to be some pain in the near term. And then he's going to bring out these pro-growth policies and deregulation and some of the immigration reform and some of the things that are in business deregulation and that people are excited about for later in the term. But he needs to get through this, this period first.
Just to touch on a lot of the stuff you guys said, I mean, the big print is coming. We're at 125% debt to GDP, something like that. The only really way out of that is growth, austerity, or like we've touched on, the printer, which the printer is the easiest solution, right?
Chronic disease.
It's very simple, right? Giving somebody the hard to swallow pill, it's very difficult. The politicians and Hayek, Friedrich Hayek, who's an Austrian economist, touched on this a lot in a lot of his works, right? He said that was his biggest critique to Keynes when they created the central bank and kind of did all this stuff. it's always going to be easy to hit that prayer button when you're in power, right? You have this short window of time. So it's a misalignment of incentives, right? Show me the incentives and I'll show you the outcome. And that was the big critique of that, because it's like a drug high. When you print all that money, when they gave all that COVID stimulus to everybody, everyone got a $1,200 or $1,000, whatever it was, check, right? You got that check and you're feeling so great, and then, oh shit, my rent doubled over the course of the year. Now I have to pay $1,500 more every single month forever, right? So printing money is very similar to that, and I think it's inevitable that that is coming. I will paint a more optimistic outlook, right? I think the blaming the prior administration, all that kind of stuff, that only, you got about 6 months of that, and then, hey, the buck stops with you, right? From a macro standpoint, the people that Trump is appointing in these roles, Trump might not fully understand all the details of our space, of Bitcoin, et cetera. He may be on that journey, right? Every day, we're all on that journey. I learn something new about Bitcoin almost every day. You go down that rabbit hole, you peel back that onion, you learn something new. And I think Trump is on that journey. He's not there yet, but he's on that journey. So I think that putting the right people in these positions, Scott Bessent as Treasury Secretary, Howard Lutnick as the Commerce Secretary, David Sachs, crypto AI guy, big technologist. I think these are the key positions and people that he's appointing. I think it's all looking very bullish for that pro-growth outlook. A lot of people say we can't touch entitlements and all those things. I saw something yesterday. We talked about it in our roundtable, I think with Danny Condon and Michelle Weekly, and Scott is here as well. Nice to see you back there. But I think they sent I want to say it was like 84 billion or something of entitlements to dead people, right? So like, we can fix some of these things. I mean, so there is that outlook. I also think that stablecoin legislation, you guys talked about the macro outlook of like, our enemies not buying our treasury reserves anymore. Well, there's like tons of people that have more hyperinflating currencies than the dollar that might want dollars, right? So in the meantime, that creates buy pressure from these stablecoin issuers to go to the treasury and say, hey, we're gonna buy all this crappy debt. This is, you know what I mean? And they're just gonna collect a huge spread, and two circles, I think it's Circle and USDT, they're taking that profit and they're plowing it into like Bitcoin mining and buying Bitcoin with that profit. So I think that's a good thing, and it gives the world more access. So I think a massive Weimar-style hyperinflation would be horrible for the world, right? A lot of people will lose. But the best advice that I could give to everybody here is just get off zero, dollar cost average. For most people, that's the strategy. Don't try to time the markets. Bitcoin could drop, go up, all this stuff. Just dollar cost average. Bitcoin has gone up on an average 60% per year since inception. Like, good luck trying to time that. So get off zero.
We don't have a lot of time left, so I'll kind of ask one or two more questions to the panel. I hear a lot of recessionary pressure, a little bit of doom and gloom. Maybe we have a lot of pain before we have a big print. But we are hearing a lot about a strategic Bitcoin reserve. I wonder how you guys think Bitcoin would behave in a recessionary environment with a strategic Bitcoin reserve. And let's say it's not a strategic Bitcoin reserve with other stuff in it. It's pure. It's about holding the coins we have or accumulating coins. And and I also wonder, if Bitcoin were to run to 500,000 or 1 million in a recessionary economy and actually decouple and behave like a risk-off asset, would that even be a healthy economy? Is that an economy we want to be in? I'm kind of curious your thoughts on the way Bitcoin behaves, at the beginning of the year with all the pressure we've talked about.
No, look, I think there is an incredible relative value trade coming where Bitcoin significantly outperforms these other assets, and a strategic Bitcoin reserve that increases kind of structural demand for Bitcoin that is outside of the system. I think is a tremendous idea, is a tremendous opportunity, and so. But to the point earlier, it's still a risk asset. There's still plenty of people who own it, who could trade it 24 hours a day, 7 days a week. It's very easy to liquidate it on Saturday when you have nothing else that you can liquidate. And if you're worried about something happening in the world over the weekend, you feel like I need to sell Bitcoin, you're going to sell it over the weekend. And so I think there are some of those issues. But as far as the U.S. government's role, I'm curious your guys' thoughts. I think it is complicated. I think there are some Bitcoin traditionalists who are a bit concerned about the government, any government owning Bitcoin as an asset. And then there are folks who are thinking, kind of America first and saying, this is the only way for America to continue its hegemony and continue its leadership is to have the hardest money kind of supporting the currency. So, I don't really have a huge thought out view on that, but I think that is going to be a conversation that folks have going forward is government control over Bitcoin. I mean, BlackRock already, I think, owns several 100,000 shares of Bitcoin in its ETFs. I mean, is this what people want? Is this what people think is good? BlackRock hasn't necessarily been the poster child that for great things. So I am concerned a little bit about that, but I think having the U.S. being an American and having kind of a more of an America first type mentality. I'm encouraged by the positive momentum on legislation and the way the administration is thinking about it, but I'm not 100% sold that this is the best idea. Plus, where are we getting the money for it, right? We're already in debt. Are we going to be borrowing more money to buy Bitcoin? I mean, maybe that is a good idea, but given the debt, but we have to think about things like that.
I'm curious, anyone in this room, when was the last time you thought to yourself, the federal government has a great idea, I can't wait to get on board? And by the way, the U.S. Treasury will own the Bitcoin. The U.S. Treasury also oversees OFAC and FinCEN. There is nothing more poisonous to this community when it comes to the TradFi DeFi integration than OFAC and FinCEN. So just to level set, the U.S. Treasury, who controls OFAC and FinCEN, wants to own $2 trillion worth of Bitcoin, and that's a great idea. Here's what probably, in my opinion, is a bit of a better idea. As a free market capitalist, as a Bitcoin capitalist, right now, the S&P 500 companies have $3.6 trillion in cash on their balance sheets. If half of those companies put 2% allocation into Bitcoin, that's $100 billion in Bitcoin flows every year. That's the private market where we own the company because we're shareholders, not the U.S. Treasury. This to me is one of the great ironies of the reserve, is that the idea that we trust the U.S. Treasury to own a huge supply of our money and manage that when they also manage OFAC and FinCEN, to me is absolutely just ludicrous.
Listen, Jenny Yellen's computer never gets hacked, okay?
Yeah, I'm sympathetic to that. I mean, look, I want the government to fail, basically. Okay, I mean, it's pretty simple. Yeah, I want the government to fail. I want the Federal Reserve especially to fail. But I want my country, which is partly the government, but more likely just a lot of people like us, I want my country to win and to succeed and to be strong relative to other countries. And so, if I look at Bitcoin Strategic Reserve versus, say, China and India, who held a shitload of gold, I'd like my country to embrace Bitcoin and own Bitcoin. If it's owned by all of us. So there are two sides to this argument. And by the way, if they do a strategic reserve, they're accelerating their own death. I mean, this is like the Trojan horse. They don't realize it, but they're helping kill fiat by doing a strategic reserve. And I'm all about killing fiat. So, I'm with Craig. I'm a little bit mixed on this whole issue of whether I want them to do it or not. It's a tricky issue. But what was your other part of your question, Cedric? I can't remember. You had another part.
Well, really, would the economy be healthy if we had such a run-up in Bitcoin while the rest of the economy was not healthy?
Yeah, sadly, I don't see how we make it through this without economic turbulence. I just don't. You can't run the biggest bubble in the history of the world where all assets are mispriced. I mean, nobody really knows what anything is worth in today's world. I mean, you got these mansions that are worth $10, $15, $20 million. It's a joke. It's a bunch of sticks sitting on a lot in the middle of some nice neighborhood. I mean, it's just a complete joke. You got all kinds of crazy prices. I mean, fuck, Dogecoin is worth $60 billion. I mean, you got Fartcoin. It's outrageous how mispriced absolutely everything is, and how underpriced honest work and honest stuff is. And so, and you just don't get from here to there without breaking some eggs, right? So, sadly, I think eggs are going to get broken. But everybody's sitting in this room, we got the best asset to ride out the storm. And on the other side of it, everybody in this room is going to have generational wealth for their descendants. And that's a big fucking deal, right? That's how I see it.
I'm like the most radical dude on this panel. Now I got to be the contrarian to all these takes. I love it. All right. So here's my take. Bitcoin is for everybody. company, country, friend, enemy. Bitcoin doesn't care. Bitcoin offers you assurances, and I think it will be a liability in the next decade for countries who don't have a Bitcoin on their balance sheet, for companies who don't have Bitcoin on their balance sheet, for people who don't have Bitcoin on their balance sheet, right? So I think this is inevitable. It's game theory. I think you're going to see that domino fall. I spoke to Senator Lummis at the Bitcoin conference, and spoke to a couple other people. And my understanding is that the votes do exist to make this happen, and this will happen. That's what I've heard. So prepare accordingly. Next, I'll say that, you don't want to not own any Bitcoin, right? So super bullish, and I do think this is going to happen, and I do think this is good for the world, and I think it's coming. So
Clearly, but I think one of your questions was how will the price react? I think it is highly likely that that kind of an announcement is bullish for price action. Price action. Is it bullish for individual sovereignty, for what's in the Bitcoin white paper? Absolutely not.
So let me just chime in on that real quick. Bitcoin operates in a system that's called proof of work, which we call mining, right? What that means is that's fundamentally different to how the world works writ at large now, where the world at large now is largely a proof of stake model, which is kind of what Ethereum operates. Other blockchains use this model, proof of stake. The model kind of works, but the idea of the model is that the more money, the more of that asset, the more you own of that asset, the more control you have. It's because you're putting up your proof of stake and you get to make decisions about how that system runs and operates. Bitcoin operates completely differently. It operates with a system called proof of work. So just because Michael Saylor or whoever owns all this Bitcoin, that gives them no more power over the network than anybody else, right? It might give them influence, like they can talk on TV, whatever, but they can't control or manipulate or make decisions for that system. So just because an entity owns a lot of Bitcoin, the miners, the node operators, the people who run the network, they still have the decision-making power as a decentralized consensus. So just want to throw that out there. Yeah.
I mean, I would caution though, KYC and anti-AML like really hinders and neuters a lot of
Definitely a
And
problem.
everything you're talking about, KYC, AML, I was in this world, that's all OFAC, that's all FinCEN, that's all U.S. Treasury. I just don't see how this is in any way compatible within the principles of the white paper around the Treasury being the largest holder on the globe of Bitcoin. Again, bullish price action, bearish Bitcoin principles.